For what feels like forever, the housing market has been a total uphill battle for buyers. But what if I told you that's about to change? New data suggests we might be at a major turning point for affordability, and it all kicks off with one simple number. Yeah, after years of just financial strain, we are finally seeing some good news for home buyers. A new forecast is pointing to the biggest improvement in housing affordability in years, and it really all boils down to a single crucial number. And that number is 20. Okay, so what is it? What's so special about the number 20? Well, it's not just some random figure. It's basically a signpost for a major change coming to the US housing market. So that number 20, it's the number of major US cities that are expected to actually become affordable for homebuyers this year. Now, to really get why that is such a massive deal, we got to look at the squeeze we've all been feeling. All right, let's just take a quick step back. The recent housing squeeze, it's been absolutely brutal, pushing that dream of owning a home way out of reach for so many people. Just look at these numbers. Before the pandemic, a typical mortgage took up about 24.5% of a household's income. Pretty standard. But by October 2023, that thing skyrocketed to a record 38.2%. Now, thankfully, it's eased back down to 32.6%, but we're still a ways off from what's actually considered affordable. And that brings us to the magic number, really, the 30% rule. So for this whole analysis, a market is affordable when a mortgage on a typical home costs 30% or less of the local median income. It's kind of the gold standard that financial advisors have been telling us about for years. This chart right here really puts it all into perspective. Get this, at the peak of unaffordability back in late 2023, only just seven of the 50 biggest metro areas were considered affordable. The new forecast, it predicts that number will nearly triple to 20. That is a huge, huge shift. Okay, so what in the world is driving this change? Why is this happening? Well, it's not just one thing. It's a combo of three key economic factors that are finally starting to work in the buyer's favor. Think of it like a recipe for relief, right? There are three main ingredients. First, that insane growth in home prices. It's finally slowing down, mainly because higher rates have cooled off some of that wild buyer competition. Second, mortgage rates are slowly but surely coming down from their crazy peaks. And third, thanks to a pretty strong job market, incomes are actually rising. You put those three things together, and suddenly buyers have a little bit of breathing room. And what does that breathing room look like in actual dollars? Well, compared to that peak in October 2023, the monthly payment on a typical home is now down by about $177. Hey, that's over $2,000 a year back in your wallet. Not bad. All right, so that's the why. Now let's get into the what's next. Zillow's forecast gives us a pretty clear peek into where the national market is headed. So by the end of this year, the national average for the slice of your income you'd need for a mortgage is projected to hit 31.8%. That is incredibly close to that 30% affordability line. It's actually the closest we've been since way back in August of 2022. And look, this isn't just some vague, abstract national number. We're talking about real change in major cities. We're talking about places like Chicago, Atlanta, and Raleigh. All of them are expected to cross back into that affordable zone this year. And this good news seems to be spreading everywhere. Affordability is expected to get better in pretty much every major market. But there's always one exception, right? And that's Hartford, Connecticut. It was recently named the hottest market of the year, which just goes to show you that local trends can still buck the national picture. But, and you knew there was a but coming, this whole optimistic forecast isn't exactly set in stone. For this future to actually happen, a few key things really need to fall into place. Yeah, it's super important to remember this is a forecast, not a guarantee. For this more affordable future to become our reality, the economy has to follow a very specific script. So, number one, mortgage rates. They need to fall and then hang out somewhere near the 6% mark. Now, that's what most economists are expecting, but let's be real, we've all seen how volatile those rates can be. And number two, incomes have to keep climbing. This whole forecast is built on the idea that incomes will grow by about 3.3%. That's absolutely essential to keep pace with home prices, even if their growth is slowing down. And then there's the big one, the biggest hurdle, the elephant in the room for so many buyers, and that's coming up with a 20% down payment.
Yeah, $71,800. Let that sink in. That's what a 20% down payment on a typically priced US home looks like right now. And for a lot of people, saving up that kind of cash is the single biggest barrier no matter what the monthly payment ends up being.
So, what's the bottom line here? How should we really think about all this? I think Zillow's senior economist, Kara Ang, really puts it perfectly. She says this isn't some dramatic market crash or a sudden explosion in prices. Instead, it's a small wins year. It's that slow, steady improvement that might be exactly what the housing market needs to get back on its feet. So, where does all this leave you? I mean, the hurdles, especially that massive down payment, they are still very, very real. But this forecast, it really does offer a genuine glimmer of hope. So the real question is this small win, this slow and steady improvement, is that the opening that you've been waiting for?